May profits be upon you. Welcome back to my YouTube channel. I hope you're enjoying your weekend. I just want to look at the S&P 500 for the upcoming week. And I think this is going to be interesting. I do. Let me tell you, this is the weekly chart, right? And what do I have? All right, let me get a pointer. All right, good. All right, so what do I have? Let me turn this off first. All right, and I just messed up everything. All right, if I can just get my pointer back. Okay, now I have these dots at the major structural points. All right, this is a swing low, a swing high, a swing low, a swing high, a swing low. All right, so what do we have here is a downtrend, right? Lower low, lower high, lower low, lower high, lower low. And that trend seems to have been broken, right? We just do something like this here. All right. I don't do trend lines to, to take trades off of. I just use it to illustrate the point I'm making that the trend line was broken. And when trend lines are broken, you look at the zone that is there, the demand zone or the supply zone, but in this case, the demand zone. You look at the demand zone that is there that caused the break. All right. When price goes away, you wait for price to come back to that demand zone and price is returned. All right. There is potential for price to continue higher. I want to also point out that when you break a structural point, like a lower high, that's indicating that break of structure is indicating that price wants to go higher, wants to turn around. All right. Break the current trend. The current trend is broken. All right. And we are at this demand zone, and that's a very attractive situation. Okay. Also, look at the trading range here. This is the halfway mark here at 50%. This is the measurement of this leg of structure. All right. And when you come from the upper 50% premium price to the lower 50%, that's discount, you want to take your buys from here. You want to take buys in discount. All right. I got two zones in here, and I want to show you something on that. Let's go to the daily. All right. If we look at that daily zone, you can see why I'm looking at those zones, because they're pretty well formed demand zones, right? I don't like this. This one is okay, but this one is better. All right. This from here, I will happily take a trade and be prepared for a loss and all that good stuff. As I am with all of my trades, but I'm going to be happy to take a trade from here. I'm okay taking the trade here. All right, because there is structure here. All right, and if you look at the beginning, the distal end of this this zone, all right, as opposed to the proximal, all right, you can see that over to the left here, there is reactions, excuse me, to this this level. Support here, resistance here, support here again, and here we are back at this same area. All right, right under this is this demand zone. So I think we have a fair, more than fair expectation that price may continue up, especially after this break of structure here. After every break of structure, you would expect a return to impulse, and this is where the impulse to break that structure point originated. You understand my thinking? Good. All right. This is from swing high to swing low to swing high, and we are in the area that you want to take a short. Okay. So what am I doing? What am I doing here? Okay. All right. So I'm going to do the 4-hour where we make our money and we can see the price action up close and personal. We don't need the pointer anymore. All right. And if we look here, I'm going to adjust my my range, the trading range from here to here, because here you can see this is the origin of the move, right? And I want you to look at this. I want you to look at this. All right. Price has come back down into this area. All right. We swept this low, swept that low for liquidity. All right. Does price need to go any lower? After every sweep of liquidity, you expect some kind of pullback. Well, that pullback already happened, and we actually took the top off of these highs, swept that high. Okay. That's it. That's interesting because it's showing a change of character. The prevailing momentum, the trend, this trend on the 4-hour, breaking these lows and protecting those highs, seems to be giving an early warning indication, a change of character. That's what it is. That price may be wanting to head it up, heading back up. It's just a smaller version, a scaled down version of a break of structure. This is actually a break of market structure. It's just microstructure. That's what it is, right? And price broke it, took the top, and returned to impulse. We want to see if we're going to see a bullish reaction from here. All right. That's what we're going to check for. All right. This isn't a time you can aggressively go down to the 15-minute and look for confirmations here for price to continue higher. All right. That would be aggressive in my view. All right. I would wait for price to break this high with a break and close above it, a break and close of a candle body, not just a wick high and then return, but a break and close of the candle body. And this would be a more conservative entry. And I would like to see that. All right. In order to take buys, you want to see supply fail. All right. You remember that rule. In order to take buys, you want to see supply fail. There is supply here. Okay. And prices come up, reacted to it. All right. And we may get the flip of supply to demand here. We may get that flip here and take this out. If I see that flip happen and we take this zone out with a break and close above, I'm looking for the return. I'm looking for the return. And I suspect if we get a bullish reaction here and it comes up here, I'm looking for a price to come back to the zone, wherever the demand zone that is responsible for taking out this supply. I'm looking for price to come back there. So that might be this one. That might be this one right here. All right. And if price comes back up there, I'm looking for price to take the demand that is responsible for it, and I will look for a high probability trade to the upside. It would be a much better confirmation if price breaks and closes above that and then returns. All right. But I am looking for a price to come back to this to the demand wherever it is. If it's down here, that's fine. But that would be the way I would want to get in this trade with some safety. Otherwise, if price takes this low out, and I suspect that it may, to come down and mitigate this zone even further, even deeper, we can get our entry model down here. There is the potential that price will come down here, using this as inducement to get people to get into longs early and then come back and take them out and then mitigate here. This is the higher probability trade. If price makes it down there, this is the higher probability trade. I'm letting you know, and I'll be looking for that. But I will, if we get those indications, if we get indications and price does break market structure to the upside, I'll wait for the return to come back here. I hope you understand what I just put out, and that's what I'll be looking for on the S&P. And this will probably speak for the other indices as well. All right, the Dow and the Nasdaq. All right, but I'm just seeing the I'm using this as the model for them. So that's it. All right, I want you to check out the other videos. I'm going to put this. This is the first of the videos that I'm putting out today. I'm going to put it on a playlist. Put them all on a playlist for you for the week ahead. Trade safely. Thank you for watching. Do smash the like button and make sure you tell a friend. All right, tell a friend that Lions Den FX is free to join the premium Discord. I just gave hours last week, free. All right, one-on-ones, talking about strategy, talking about entries, talking about how to read structure and everything. I gave hours last week for free. All right, mentoring. All right, if you want to learn, if you want to raise your level, all right, come on down to LDFX. All right, Lions Den FX, and come see us. All right, I will see you in the next video. Thank you.